The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. They do not tell us points paid, points received, APR. They only give us the locked rates. And since they've got a 42% market share, it's worth listening to. Yesterday, the 30-year conforming loans locked at 6.742, jumbo loans 6.939, FHA loans 6.694, USDA loans 6.629, and the best loan on the market, 6.39. That would be the 30-year VA loan. Remember, every morning, if you want a market update, we do send that out by email. It's also on all of our social channels. But you can go to rsrmarketminute.com, rsrmarketminute.com, and we send out a little market commentary for the day. It's only a page or two, so it's not a whole long read. But let's take a look at what's going on in the market now, moving a little bit closer to today, what the markets look like. So the 10-year Treasury flat down 1 basis point, no big deal. The S&P 500 is up 20. Mortgage-backed securities, that's what drives the actual mortgage rates, down 17 basis points, which means that interest rates are up just a little bit today. Why? Well, we got housing starts fell by 8% in June to 1.434 million unit annualized pace, which was lower than estimates. Additionally, May's figures were revised lower when factoring in that revision. Starts are really down to 12%. Year over year, starts are now higher by 8.1%. Single family starts, which is the most important, fell by 7% last month at a 997,000 unit pace. Housing permits, which is the future supply, were down 3.7% last month to a 1.44 million unit annualized pace, and are now down 15.3% from last year. Single family were up 2.2% last month, but is still down 2.7% year over year. Completions fell by 3.3% last month. Single family fell by 2.8%. When we look at the new supply, they'll be coming to the market around 1.4 million annualized, and subtract roughly 100,000 homes that need to be replaced every year, bring the figure to 1.3. It's well below demand or household formations that are trending at 1.5 million. What does that mean? Why do I share it with you? Well, it basically says we need 1.5 and we're not making that many. So rates are going to stay high because there's more demand. According to a recent report, for every 3 homes that are listed, there are 10 offers. Why is that important? Well, if somebody's making an offer for a house, most likely they want to buy a house, right? Otherwise, you have shoppers and you get the people that are out there shopping for properties. But if you've got basically 3 to 1, that's an indication of demand as well. So there's a lot of people that want houses, can't get them. That means Chapman University, are you listening? Prices are not going down on properties. Just throw that out there. I know Chapman wants us to believe the median price is going down by 11%, not the real property. NAHB Housing Market Index measures builder confidence, rose by 1 point. Present situation was up 1 point to 62. Future outlook fell 2 points to 60. Buyer traffic rose 3 points to 40. Remember, on these things, 50 is what a baseline is. So anything below 50 means we're contracting. Above 50 means we're in good shape. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You make the call. Remember, rsrmarketminute.com will send you out a morning update on what's going on in the market every day, unless you're listening to Ron Siegel Radio, where we give you a little bit more in-depth. So that's, again, by our friends at Geneva Financial.